Let's connect with Sandip Sabharwal as well, who's with us in our studios. And Sandip, we're talking about the buzzword in the newsroom today, and that for sure is Amit Shah. What is it that you're making of as to who could potentially, take the FM seat and what that would mean?
On that, your guess is as good as mine, but Nikun's guess might be better because he's more connected in the Delhi circuit. But in any case,
take the wild guess.
Buzz is something which we can quantify both ways.
So I think Amit Shah obviously will be positive because you need someone who is more on the ground. Last two times, both Mr. Chidambaram and Mr. Jaitley were more people who were more academic oriented. So they might have a knowledge of economics to some extent, but on ground responsiveness was low in my view. So I think we could see that on ground responsiveness improve, and given all of us know his clout in the entire system, he can get things done. So I would think it's positive, but whether markets will react to that, I'm not sure, because markets have in the near term reacted to the formation of the Modi government already.
We are looking at the data, and Sandeep, trust me, it's not an error. A week before, when India 1 got elected, market rallied 5%. A week after that, the market reaction was 2.3%. A week before, when NDA 2 got elected, markets were up 4%. A week after that, it's exactly a week today, the market reaction is 2.3%. But Sandeep, interestingly, once that initial up and down happened, the weak traders got out, the smart guys came in, the Johnny come lately crowd who was waiting for some decisive mandate, they came in. The market went up by nearly 10% in next 3 months. Are we in for a 10% or maybe a double-digit gain in next 3 to 5 months?
5 months, yes. 3 months, I would say it will be tough, because given looking at whatever is happening globally. So we can't move away from that, because
crude is down. You should be happy.
Crude is down, but the reasons for that are we have to evaluate. Like Chinese diesel demand in March and April has fallen 15%. Yep. So a 15% fall in diesel demand in an economy indicates a significantly slowing economy, and that by itself could create a lot of impact on the other global economies. And US, like Donald Trump imposed tariffs on Mexico early morning. Yeah. So I think there are a lot of things going on which we cannot run away from. So in that context, what becomes important, I think what becomes more important rather than the government formation which has happened and which is factored into the market at this point of time, is the stance of the MPC and RBI. That is more important today in a scenario where the global bond yields, if you look at them, are indicating a potential recession going forward. So in that scenario, our interest rates are too high and the liquidity in the system is too tight. So this needs to be addressed immediately. So along with the government and whatever they'll do, unless this is addressed with these kind of real rates, it's tough for any economy to perform.
Yeah, Sandeep, I get your point, but that we were discussing this last afternoon as well. While there is a compelling argument that there should be more rate cuts, the rate transmission hasn't happened since the last two policies.
The transmission can only happen when liquidity moves into surplus.
So then it's futile, right? Whatever rate cut happens or not, if the transmission doesn't happen.
Yeah, so the bigger thing, actually most people talk of rate cuts, actually it should be liquidity infusion. So if RBI just takes the deficit to surplus, that by itself will create the transmission rather than an actual rate cut. Rate cut is more sentimental, liquidity improvements are more on the ground and real.
Okay, I'm just going to start picking up stocks now. Lots of stocks which we need to discuss, and couple of stocks which first is Emami. This was the go-to stock couple of years ago because it gave you flavor on the rural economy. It had a promise of cannibalizing the existing market share of the big FMCG majors because they were a rural focus FMCG company. They came up with innovative solutions. They were also able to gain market share, and after that acquisition which they did couple of years ago of Kesh King, the hair care business had expanded. Sandeep, Dabur, Emami, these are businesses which are feeling the heat now. Is this a time to just ask yourself a very basic question, which is that good news and good prices don't come together, and this is a time to buy some of these FMCG companies, because today everybody is talking about slowdown, some are feeling the slowdown and brokerages are reacting to the slowdown. But should smart investors actually be accumulating in this slowdown?
Yes, smart investors should be accumulating in this slowdown.
Even Emami?
Imami, I don't have a specific view, unfortunately, but I would think that people should be accumulating, but the slowdown on the ground is real. So, most of the companies, if you attend the conference calls, they are hoping for a revival. Now that hopefully that revival will come, my guess is it will come because the sentiments will change. So, I think that will be keen to monitor. So, these stocks will come back for sure. It's only a question of whether they come back in 3 months, 6 months, etc. So, I think when the prices are good, people need to buy.
You know,
But
another
Sandeep, last afternoon you were saying that you will take a call on whether to buy these rate sensitives once the policy is done with. Would you hold back your buy on, say, some of the auto names which you've been eyeing for a while if there is no policy change?
So, if there is no policy change, I believe that the market itself will react quite negatively. I would think because because the economy needs that support. So, if they decide to wait and they give reasons like we will wait for the budget, see the fiscal deficit, and they can give all sort of reasons either ways. So, that's why I think this time the policy is more important than what it was the previous 3-4 times.
You know, before I just talk about another trend which I think is staring on at us is I was thinking through it that what can the government do? Can they really come out with a fiscal stimulus? The answer to that is no, because your fisc in a sense is already, you know, it's smokes and mirrors. You're selling something to HPCL, you're selling something there, selling something here. You've taken advances from companies like Container Corporation and other companies. So your fisc is not in a great shape. You may make it look good on the paper, but the reality is that the fine print of the fisc is not great. Do they have the elbow room to go out and start spending? Again, the social care schemes like you know, PM Kisan and what they've announced, they would actually be spending as per the manifesto promise. Can they really increase government spending you know, on top of that? That I think is a very debatable kind of a proposition. But the trend which I want to pick up is that if I look at some of the retail stocks here, TCNS Clothing, Trent, Aditya Birla Retail, these stocks are sitting at record high, and it is happening at a time when there is a general slowdown in the sector. Page Industries did not come out with good set of numbers. Arvind seems to be feeling the heat, but Trent is at an all-time high. TCNS is at a 52-week high. You got Aditya Birla Fashion Retail, which also has done rather well. Sandeep, it's a small sector, but it is a puzzling trend, isn't it? If there is a slowdown, retailers should also suffer. But that's not the case if I look at what Trent has reported and what DMart is reporting. PVR Inox are saying.
So, what PVR and Inox have done, it's a different category. So, it's more on entertainment.
It's a different kettle of fish. Let's throw it up.
So, people are not cutting down on that. But on the consumption side, most of the companies have indicated slowdown. Some whose numbers don't show it in the previous quarter. If you actually look at what they are saying about this quarter, they are clearly seeing a slowdown. So, I think the slowdown is real. So, we can't run away from that. But whether now the bet is on how fast the revival will come. So, I think that's the only thing. So, some of these companies have, some of these companies did very well, then they flagged off, didn't do as well, now they are coming back. So, that's how I'll see it. Retailing longer term is good, but I think most of the stocks don't have cheap valuations.
Okay. But if there is to be a decline, if there is a slowdown, would you buy these stocks?
Yeah, at the right valuation. So, but the right valuations are not there at this point of time.
Okay, but the slowdown is real, that's for sure. That's the word coming in from Sandeep.